The Fed just slashed their rates by 25 points. And if history tells us anything, small cap stocks are about to make their move. Today, we're going to cover the top 5 Canadian penny stocks that are poised to make the largest move in the markets. Stick around to the end of the video to get to number 1. Welcome back to StockScope Live. Today, we're back with another market-moving episode, and we're diving deep into the Canadian penny stock gold mine created by the Fed rate cut that happened yesterday. There are a lot of people chasing big tech names, and investors that are not telling you their strategies are slowly accumulating these small cap gems that benefit from rate cuts. I'm going to reveal my top 5 Canadian penny stocks, and we're going to break down how you can get in and not get burned. So stick to the end of this video. If you're new here, subscribe and like this video. I'm trying to reach 50 likes. Help me reach my goal. All right, let's start with the fundamentals. Why do penny stocks explode when the Fed lowers their rates? Well, it all comes down to 3 powerful forces working in your favor. We're going to cover them really quick, okay? First, we got cheaper capital. Smaller companies live and die by their access to funding. So when the Fed cuts the rates, that cascades through the entire financial system. The small caps, they're paying 8% on their debt. Now they're paying 5 or 6%. That's immediate margin expansion. That means more cash flows goes to their bottom line. Okay, the second is investor psychology. And when your savings account, for example, is only paying you 2% and government bonds are paying 3%, suddenly the speculative penny stock that could return 50% isn't so crazy anymore. Risk appetite explodes and money flows through conservative assets into growth plays. And let's be real, when something costs less than $1, it's easier on the psychology to spend that money versus Nvidia stock. Ooh, $176 per share. I can't even own one share. Why would I even get into it, right? Third is economic stimulus. More investment, more consumer spending, more economic activity. Small companies can pivot faster and hit those opportunities that big companies miss. Historical data, for example, shows that in the 12 months following a rate cut, small businesses outperform large cap businesses by at least 12%. And right now, the TSX composite just hit 905 this week, and that's nearly 3% in just 2 days, and there's more room to run. So, all right, the moment you've been waiting for. Not going to hold you hostage any longer. We're going to reveal the top 5. Just remember, this is not a money-making scheme. I'm not promising you $1 million in returns. Let's get into it. Number 5, Westbridge Renewable Energy. What ticker WEB, and it trades on the TSX. Now, currently, this company is trading around $2.86, and it had a massive run-up this week, up 32%. Currently, the market cap is pretty small, around 71 million, with their new market price that brought them up to from 61 million. Now, obviously, this is clean energy, and clean energy has had massive investment, and lower rates are really, really pumping that up. Now, let's look at this chart real quick. We can see down here, we had a bump from the bottom all the way to where it wicked up to, but it stopped at 286. That's about 32%. If you zoom out a little bit, you'll notice that there is some resistances that just needs to break. And we saw this wick go up past it and then come back down again. And that's this 200-day moving average, this red line, right around 290. And previously, this was a resistance line around 296. So we need to break through that. Now, you might think to yourself, hey, I think I missed the boat here. But I rather invest in stocks, but once they break through these resistances to guarantee a higher upside. Obviously, it would have been great if you're in here around 220 and then this upside came. You would have made a good chunk of money, depending on the size of your investment, but you could have been up 32%. Now, that's not really the end of the run. We need to break through these resistances, and then we get to break through the next resistances, and that's how stock market works. It goes up. It hits a resistance line. It goes back down. It goes up, and that's the selling and buying pressure. Once it makes it through the resistances, that's when things can go up again. And then they hit their next resistance, and so forth. So unless you're day trading, you don't need to worry about them. But you do need to worry about the downside. And that's why you need to make sure you have your stop loss orders in place to make sure you protect your investment and you don't lose your money while you're sleeping. Coming in number 4 is CEMX, or CEMETRIX. Ticker CEMX, trades on the TSX. Currently, it's sitting around 32 cents per share. Now, what we're looking for with this one is to test the previous all-time high that was just around August last year. And it's kind of sitting around that price right now after it had a big day moving up past 32 cents and then back down to 32 cents. So we've broken through the all-time high and then back down. Now, what I'm looking for is for them to test the 35.5 cent line. And if they can break through that, we might see massive upside with this stock. What does this company do? Go to their website and you'll find out more about the details. But basically, they provide lightweight solutions for backfilling concrete and that kind of thing. They don't fill with heavy concrete. These contractors have a lot of moving sites. They don't want to be there for a long time. They don't want to pay for that. So with government funding and construction projects booming, these guys are getting a lot of contracts with some companies. They have a webinar coming up on September 25th. If you're interested in this stock, make sure you attend that webinar. Let's move on. The next one is very interesting. I've never covered this type of stock before. Name is Pulse Seismic, ticker PSD. Currently trading around $3.36. Market cap, 171 million. It trades on the TSX. They're the data king for oil and gas exploration. The stock is about 14% down this month, but it creates a perfect entry opportunity for people who are interested. The lower rates that we're seeing are going to mean there's going to be an explosion in exploration and drilling, because these drilling and exploration companies benefit a lot, like we talked about, from rate cuts. And if they're going to do drilling and anything like that, they need massive seismic data. And that comes from this company. They have the largest library in Western Canada. So make sure that you check out their website, check out their data. If it's recurring revenue with high margin type of company, it's kind of my favorite thing, but it's a very niche place to be. So it's got to be timed right. Looking at their chart, you see that they're still they broke through their 50-day average, but they're still above their 151-day average. And it's really just fueled by uncertainty in the drilling market. I still see it trading above the 200-day and 150. We want to look for a bounce back to test this line, 362. And then obviously we need another test of the higher line around 420. And if we can see that happening, we might see some massive upside. Keep an eye on it. Not telling you to buy in, but do keep an eye on it, because we're going to see more drilling happening in the near future. All right, guys, coming in number 2 is Amerigo Resources, and their ticker is ARG on the TSX. They're currently trading for about $2.35 per share, and their market cap is a whopping $380 million. Now, they're up about 48% year to date, but I feel like their upside is still coming in, because the weaker dollar due to rate cuts means that commodities like copper are shooting through the roof. And copper is absolutely critical for the green energy transition that's also accelerating globally. These guys have been in Chile since 1992, and they've produced over 1 billion tons of copper so far. They have a simple, proven technology that makes them very, very efficient. They also produce a byproduct of copper that comes out during their process, which is also used in other industries. Go to their website, take a look at their stuff, and make sure you look at the presentation that they have on their site. This chart looks really good. We've seen a massive explosion right around June this year, and we have seen that upside go all the way to around $2.45, comes back down to $2-ish, and now we're back to those same heights. This is their all-time high, which was around $2.45. So you might think to yourself, is this a good time to buy in? Well, we just saw a dip down to about $2.05. And now we're back up here. We're back over all of the moving averages. This is a bullish indicator telling you that this company stock is gaining steam, basically, and it's going to be rocketing forward. So I would keep an eye on it. As soon as it breaks this 245, that would be my entry point, somewhere between 240 and 245. And obviously, I'm not telling you to buy. This is not financial advice. So make sure you do your own research and make sure your stop losses are in place. Protect your investment. All right, the moment of truth. Coming at number 1 is Montero Mining, ticker MON, trades on the TSX. This company is trading currently at 33 cents. When I looked at it earlier, it was at 31 cents. It's a very tiny company, 15.5 million market cap. This is a very high risk, but very high reward territory. So make sure that any investment you put into these kinds of plays is money you're willing to lose. They're exploring for battery metals in proven geological areas, and they settled a major lawsuit in Tanzania. You can look up the details, for 27 million USD. And this is where you saw this massive downward pressure come in, and they went down about 81%. But this means that there's an upside of almost 500% on this company. It's not that they did anything wrong. This was an arbitration case brought against the government of Tanzania for the exploration of its rare earths. And this company was just caught up in the middle. So it's not them. It's the government. Anyways, they are actually also in Chile, and they're doing mineral discovery and mining. They hold about 203 kilometers squared, or square kilometer of copper exploration contentious areas, and it's proven that that area is heavy in copper. They can return massive gains. I would say that these types of investments carry a very high risk. You're putting in 1%, and if that 1%, 5x's or 10x's, it's going to move your portfolio by about 5%. So don't put a lot of money into it. But we're already seeing it climb back up. If we move down and we expand this, we're seeing the sideways consolidation. There was massive volume right around the day it came out because people knew that this company's still doing good work. So not telling you to buy it. I'm definitely in it, and I'm going to hope to win it. So if you like this kind of content, subscribe and hit the like button. Leave a comment down below and let me know what else you think is going to explode from the penny stocks. Okay, if you've made it to this part of the video, that means you want to know more about how not to break your portfolio. So there's a few rules, and let's talk about them. Rule number 1, never fall in love with a penny stock. Just don't do it, okay? Set your profit targets and stop losses before you even buy the trade. I'm going to buy here, I'm going to sell here, and if it goes down, I'm going to stop loss down here. Really, really straightforward. I always set my stop losses, depending on the risk level, anywhere between 10 to 25%. If a stock is volatile and it goes up and down a lot during the day, you don't want your stop loss order to kick in every day. So you got to understand what the volatility is of every stock. What is its range, and set your stop losses accordingly. Next, profit targets depend on the stock and the market cap. For more established names like Pulse and Amerigo, I'm looking for about 30 to 50% gains. For higher risk exploration like Montero, I'm shooting for at least 1x, 2x, at least, maybe even 3x. But I'm taking half my position off the table as soon as it hits 75%. So every time my penny stocks move up a certain range, 60 or 80%, I always sell 25%. And then if it moves up another 20%, I sell another 25%. And then I hold the rest for the rest of the upside. At that point, I've made my money back, or almost my money back, and now I'm just looking for gains. Timing is very crucial, especially on your entry points. And this is why I think stock like the last one we talked about, Montero, is actually poised for an entry position. We know that the stock was performing well. We know that the company itself didn't make any changes to its operation, and they were caught up in some government lawsuit. So make sure that you understand your timings. Don't chase stocks that have already moved 20% in a day, like Westbridge did this week. Wait for a pullback because you know that the upside is there. So you're going to have to wait until they come back down and test another support line, because people are always taking profits, just like we talked about just a second ago. So these people are going to hit their 60, 80%, and then they're going to take profits, and that's going to bring the stock price down and test a specific level. When you see that level gets tested once and twice, that's your entry point, and that's just my suggestion. So Also watch for earning reports. Stocks usually have reports coming out every quarter, and that basically even small caps has surprises on the upside when the business conditions improve. So they can also disappoint spectacularly if they're small caps, so position size still matters a lot. One more crucial point, liquidity matters. Make sure you can actually sell your position when you need to. For example, CEMX traded over 600,000 shares on Friday. That's excellent liquidity. So if you have a lot of small volumes, that means there might not be a lot of people buying. And if you need to sell your position, you might not find a seller, even though you set your stop loss. So just because you set your stop loss doesn't mean that your stop loss order is going to actually execute and get filled. If no one is buying, you're not going to be able to sell. Keep that in mind. So check for daily average volume before you buy to know what your liquidity is going to look like. I hope that was informative. All right, there you have it. We've covered the top 5. We've covered some potential upsides and potential downsides and the risks. We also talked about the rate cuts and how they affect the markets. Right now, we're going to see some huge upsides for anything that benefits from rate cuts. Anybody that needs money and doesn't produce a lot of revenue and requires these funds, they are going to benefit. If this analysis helped you get informed or even invest or make money, drop a comment below. Let me know what you liked about it. Let me know what you didn't like, so we can keep improving this channel. It's only about a month old, and I'd love your support. So please subscribe, comment, like this video, and share it with other people who'd love to learn more about this. Until next time, stay diversified, stay safe, and I'll catch you in the next video.